Good day, friends. This is lesson number 14 of the Options Are Easy series, and today we're going to look at a strategy called butterfly. There are different ways to build a butterfly. One way is to use call options exclusively or put options exclusively. There's also the way to create butterfly with call and put options. Today I'm going to show you all of the variants. I have a Bitcoin futures options board open. The price is around 29,700, but I take the central strike of 29,500 to show you how to build a butterfly. I sell 2,000 put options of this strike, for example. The chart has already appeared. You need to buy options on the left and right, 1,000 each. So I bought 1,000 options at strike 29 and at strike 30, 1,000 options. And now we have a butterfly. On the left and on the right are its wings. And as you can see, the range of the strategy is very narrow. In other words, we can say that it is a straddle with bought leverage on the left and right. In this strategy, we expect the futures price close to expiration to be at the strike price of the option sold. I repeat. We sold 2,000 at strike 29,500, bought put options at strike 29, 1,000, and the same amount at strike 30. We can construct the same thing with call options. Which options, it doesn't matter at all, because you and I know the parity rule. You can choose any options you want, depending on liquidity. If you are going to build a butterfly a little to the right, it is better to do it with call options. If a little to the left, it is better to use put options. We're building butterfly with call options. Let's say I do it at strike 30. I sell 2,000 there. I buy 1,000 options at strike 29,500 and at 30,500. Just understand the rule. You have to sell twice as much on the butterfly cap. Look. It's a butterfly on call options. Now there's one interesting thing. Let's say you've built a butterfly with any options. Give me a couple of seconds. I want to add the butterfly that we built with put options at strike 29,500. And we got the Iron Condor. The strategy from last lesson. From two butterflies with call and put options and strikes 29,500 and 30,000, you get an Iron Condor. If you add another butterfly, you can expand this condor. So you can buy cheap butterflies if you expect the price to approach their levels. In this way, the condor's cap expands and you have the opportunity to earn significantly. Homework. Try to do it yourself. Model, create butterflies and you will see for yourself. Now let's build a butterfly out of put and call options together. So I sell 1,000 call options at strike 29,500 and 1,000 put options. What's this strategy? That's right, straddle. I hope you remember my previous lesson on straddle. Also on the left, I buy put options at strike 29 and call options at strike 30. Look, it's the same butterfly. So you can model a butterfly with any type of options. Such strategies are used if the price is close to the strikes and we expect it to approach a certain level, 30,000 for example, when at the moment it is 27,000. Then we can use the butterfly expecting it to come to this level. Bitcoin is often traded by levels. Every trader who works with Bitcoin thinks, okay, Bitcoin level is 35 now, then it will be 40, here I fix it, then it will fall to 35 and so on. Big and rude numbers. If our scenario works, we get a very good profit. Butterfly trading, to tell the truth, resembles roulette. Because the probability that on expiry the price will be exactly at the point of the sold option is, frankly speaking, low. Therefore, it is better to use strategies with large caps, to put several butterflies together to get an Iron Condor. One of the advantages of butterfly is that their Vega risk is very low, as the strikes are close to each other. If the volatility rises, the price of the butterfly will not change significantly, and the loss will not be too high. No one forbids you to build wider butterflies, but they will cost more. Premiums will have to be paid, risk on the left and on the right will increase, margin requirements will also increase. Again, I suggest you try modeling the butterflies yourself in the AE exchange with different instruments. Dogecoin futures with the highest volatility and the most expensive options, Maytag, Bitcoin. The butterfly strategy is suitable for rough trading by levels. If you believe that the price will stop near the absolute strike, and then the profit will be very high. In this case, the profit is 10 times the risk. In other lessons, we will look at inverted butterflies and unequal wing butterflies. If you are not subscribed to the channel, then subscribe, so you don't miss new videos with new strategies. Leave a like, ask your question in the comments. I wish you successful options trading and all of the best. Good luck!